let's buy this company. I'm pushing the bid to 120.
I'm not letting you Neanderthals in to rape my company. You, daddy's boy.
You want to bump the offer another point? Do you want to call your dad?
No. Do you want to call your dad? Look, it's exciting. This is going to be great for you, Dad.
I'm excited.
In this reaction video, I'll break down and explain the core financial concepts in episode 1 of Succession. Based on my work experience at Goldman Sachs and at the top hedge funds in the world, I'll also teach you many finance concepts from the episode, including how an M&A deal works and why you need to create a trust for your family. Now stick around, because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. Let's begin with corporate politics when it comes to a family business. Who wants the power and the money?
Kendall, Roman, Connor, Siobhan, sweetheart.
Happy birthday.
Where's Tom?
It's yours.
Cousin Craig.
It's Greg.
Now, just like with Rupert Murdoch with his News Corp empire, and per this org chart of the family in Succession, Logan Roy's family are fighting with each other to take over the company. And the show is an accurate depiction of what happened in real life with Rupert Murdoch and his kids, and also what happened with Viacom and CBS media giant Sumner Redstone and his daughter. Let's talk about M&A. Logan's son, Kendall, wants to turn his dad's old-school media company into a state-of-the-art new media company by buying a digital media startup called Vultr. Let's learn about how M&A, meaning mergers and acquisitions, work.
Good to see you. So, we ready to what?
Yeah, okay.
Now, this was likely the first M&A meeting, and there's no way the acquirer would use ridiculous language, but it makes for awesome TV entertainment. Now, the acquiring firm, meaning Logan Roy's Waystar Royco, sits on one side of the table with their investment bankers, and let's pretend their investment bankers are Goldman Sachs. And on the other side of the table is a company getting acquired, meaning Lawrence Yee's Vultr. And the firm getting acquired is always represented by a different investment bank. Let's pretend it's Morgan Stanley. Why two different investment banks? Well, just like with a legal trial, you don't have the same law firm representing both companies for conflict of interest purposes. Now, big investment banks like Goldman Sachs and Morgan Stanley, when they represent firms getting acquired, they often prefer to do larger deals, meaning deals that are often $500 million or bigger, and this deal is $1 billion deal.
Look, I'm really sorry, but it looks like there's an issue.
Come on, I came all the way up here, dude.
Yeah, I'm sorry, dude.
Now, Lawrence Yee, the CEO of Vultr, might be playing hard to get, which is really smart when negotiating, so he can, of course, get a much higher price when selling his company. One thing that is often overlooked in M&A deals is the culture fit of the deal. Clearly, the cultures of the two companies are radically different. Lawrence Yee's tech company is less formal clothing-wise, and he feels uncomfortable with the way that the Nepo baby Kendall is talking to him. And M&A is not just about accretion and dilution. It's also about cultural fit, because the employees of the firm getting acquired will quit if there's a culture clash. Quick side note, a deal is accretive if it makes the PE valuation of the company doing the acquisition go down as EPS goes up. And a deal is dilutive if it makes the PE of the firm doing the acquisition go up, meaning EPS goes down.
You know I love what you do, right? I mean, I'd love to keep you and your team in place, Lawrence. I think Vultr is the shiz.
We're the shiz?
Yeah. What's it gonna take? You want me to send a vintage Jaguar over to your house today?
So M&A deals for the company getting acquired is not just about money. Now, when you start a company and you put your blood, sweat, and tears into it, the company for many founders is like one of their children. And Kendall Roy, the dude trying to buy this startup, thinks that people are only motivated by money, which is not the case, and it's a result of his brutal upbringing.
I just think bottom line, I can deliver a lot more value for our shareholders. We appreciate your interest in our little outfit, but I think that's it.
What the f happened?
Now, what likely happened is Lawrence Yee either wants the acquirer, Kendall, to increase the bid, or perhaps Lawrence Yee's investment bankers are talking to another media company in the hopes of getting a higher bidding war, kind of like what happened with Shohei Ohtani when he was talking to the Toronto Blue Jays before signing with the Dodgers, or how Arron Judge was talking to the Giants before signing with the Yankees. Now, Lawrence is professional in the board meeting in front of the bankers, but not one-on-one.
You get the message?
What?
I'm not letting you Neanderthals in to rape my company, ever.
I'm sorry.
A bunch of bloated dinosaurs who didn't even notice a monkey swinging by till yesterday. Well, you, daddy's boy.
Now, clearly, Lawrence Yee is in a tough position as he's got a fiscal responsibility and a fiduciary duty to his shareholders to maximize the share price. But from a culture perspective, he doesn't want to sell his high-growth company to immature Kendall Roy's old-school media company.
What the Frank, how can we salvage this?
You still want to pursue this?
Yeah, of course I want to pursue it. I want to announce. This is part of the whole thing. This is the secret sauce. Do we need to sweeten the offer?
You want to bump the offer another point?
So Kendall is in way over his head, and he's emotional. And usually very successful executives are unemotional. Now, in that clip we just saw, his COO and potentially his investment banker suggest that he needs to raise his offer. And usually the premium that one company pays for another in M&A deals is around 30%.
Do you want to call your dad?
Do I want to call my dad? No, I don't want to call my dad. Do you want to call your dad?
No.
No? Do you want to call your dad?
So often the first generation makes the money, the second spends it, and the third has none. Now, there's nature and nurture. And Logan raised his son Kendall from a nurture perspective to be ruthless. But Kendall's a lost cause, because from a nature perspective, he's not a killer, which is why his dad, Logan Roy, decides not to let him be CEO of Logan's company. And Logan likely decides this based on this phone call right here.
How's it going?
Yeah, I'm right in the middle, Dad.
Did you close?
We're not quite closed. And are we still good for the announcement?
Uh-huh.
Now, the announcement was supposed to be that the son Kendall is succeeding his father Logan as the CEO, and Logan thinks he's too weak to do it. And as a result, Logan decides not to retire. And as previously mentioned, founders often see companies as one of their children. And sadly, they often love their companies more than they love their children, which is why we sometimes see the children of billionaires in lifelong therapy.
They're not going to budge unless it gets to be a stupid number.
What's a stupid number?
What's stupid? A badillion, I don't know.
Because 120 is stupid. Am I wrong? 120 is a stupid number.
Yeah, it's not really a money thing right
Mr.
now, is
Roy,
it?
someone's here to see you.
Okay, who's...
So what does Logan, the CEO and father, think of Kendall's M&A deal?
You spend all your time on cost. Where's the vision? Where's the growth?
Is that why you're paying $1 billion for a website?
It's a portfolio of online brands and digital video content, and it's part of an upstream investment strategy to save us.
So one of the reasons that there's tension here is that the son, meaning Kendall, is a growth investor and the father, meaning Logan, is a value investor. And growth versus value investors is often as contentious as religion or politics. Now, growth investors like buying expensive stuff that is growing fast, like Lawrence Yee's company Volter. And value investors like Logan and Warren Buffett usually like buying stuff that is cheap, not growing fast, but throws off a lot of cash. Now, Logan's house in this episode, is interesting, was listed for $52 million in 2021, and the address is actually 991 Fifth Avenue, New York City. Also, what's fascinating is the Waystar offices are located here at World Trade Center in Towers 4 and 7 to mimic Rupert Murdoch's office. Let's get back to the M&A deal, which could turn hostile if the company getting acquired does not want to sell and if it's publicly traded. Now, similar to what activist hedge fund investor Carl Icahn does, Waystar can buy a large stake in Volter, then file a Schedule 13D, then engage with the board and pressure for strategic changes for the sale. But that could take 6 to 12 months plus approval from the Department of Justice for anti-competitive reasons, and Kendall is desperate to quickly close this deal. Now, one way to stop your company from being acquired if it's publicly traded is you can have what's referred to as a poison pill. And what this means is the company that is being acquired can issue discounted new shares to all shareholders except the acquirer, diluting the acquirer's stake. And this dilutes the acquirer's ownership, making it far more expensive or impossible to gain control. And this tactic really buys you time for the target at least to find what's called a white knight, meaning a friendly buyer, or to negotiate better terms. Now, it looks like another investment bank is representing another competing offer.
PPG Bank have got their nose in. Might be rustling up another bid. Yeah, word's out. We gotta move. What do you want to do?
I'm not losing this deal. We call PPG. We offer to cut them in on the financing if they make the other bid. That's how it's done.
Now, Kendall wants to partner with PPG, which is likely another investment bank representing another buyer, by sharing the economics of the deal. And we know that investment banks can't advise the buyer and the seller. So this is a confusing conflict of interest or maybe a shady business deal that's not really well explained in this episode. Now, with some larger deals, similar to what you see on the cover of an IPO prospectus, multiple investment banks are part of the syndicate and they share in the economics of the deal. Now, if we assume that Waystar is paying $1 billion for Vaulter, then this likely means around 1 to 2% in investment banking fees, meaning about $10 to $20 million in fees for the investment banks. And unethical Kendall partnered with the competing investment bank, PPG Bank, which resulted in this.
Lawrence, sorry the other offer fell through. I don't know what happened, but we fattened the goose nice now, right? The number is 140, cash with a stock alternative.
So Lawrence gets cash or Waystar stock or both, and he probably wants cash, as he doesn't believe in the old media Waystar's prospects in the long run. But if he does get a lot of stock, he could have influence on the future of Waystar. What are the other deal components?
You're on our board.
You better play nice, though, because I'm the whole company.
Yeah, I think you're gonna stick around because I'm gonna stuff your mouth with so much money you're gonna gold figurines. Non-disclosure agreement, non-voting shares, non-compete.
So Lawrence gets a board seat, but he cannot share any corporate secrets, hence the NDA, meaning non-disclosure agreement. And for a certain amount of time, he can't work for a competitor. And what usually happens is the CEO of the company getting acquired joins the company making the acquisition for at least 1 year. Then they end up leaving the second they can. And they take the money and run. Now, will Lawrence Yee take this deal?
I'm gonna lock you in a golden cage, you with a silver dildo, and pay you so much you sing whatever song I want.
Easy, you still need me to recommend this.
No, I don't. This is a deal so good, you have to take it, or we'll see you in court.
That's not accurate. Yes, Lawrence has a fiduciary duty to take the deal to his board, but this see you in court part is not something that happens often and is another example of Kendall's lack of experience. And threats of litigation are rarely effective unless there's solid legal footing, and using them prematurely can really destroy trust.
Deal. It's all very exciting. I can't wait to see.
We got a deal?
Yeah.
Serious?
Yes. Your dad just had a brain hemorrhage, and without Daddy around to protect you, I'm gonna eat you all. One by one.
Now, in many companies and in life, when you have power, people will always try to take it away from you. Now, real M&A negotiation is slower, more cautious, backed by due diligence, risk assessments, legal review, and conditional clauses. Also, real M&A and investment deals often include layered consideration, like earnouts, contingent payments, option structures, performance milestones, and management retention. And when doing thorough due diligence on a public company, I recommend using my framework, which is 100 steps to analyze companies, which includes qualitative, quantitative, and financial due diligence. And in real M&A, bankers use models like DCF, meaning discounted cash flow, to project future cash and discount it to today. But egos often override Excel sheets, as in this case. And you always start with a management team when you're doing analysis. And after you answer questions on all 100 steps here, you can export the comprehensive due diligence report or check out the dashboard of metrics or even export a one-page summary. Now, I also recommend doing a thorough forensic financial statement analysis on the company being acquired by analyzing the financial statements using AI, including analyzing the footnotes. And like my other templates, you can export the report into a massive document or print out a one-pager. Now, if you want access to the aforementioned templates and hundreds of hours of my finance lessons and one-on-one access with me, please sign up for my program that teaches you finance, accounting, and investing from scratch in case you want to get help in getting a better job in finance, or if you want to become a better investor. Please see the link in the description of this video to speak with somebody on my team. Thank you. Let's get back to the M&A deal. Now, let's go to pretend company Waystar Royco's website. And what happens after a deal is a company issues what's called an 8K, meaning a press release with often material information in it, which gets posted on sec.gov and on the company's website, as we see here. And here we see the terms of the deal. The deal is an all-cash $140 per share deal, meaning $1 billion in cash. And Logan is quoted in the press release and not Kendall, which is a burn, as he architected this deal. And Lawrence Yee is also quoted in the press release. Now, if we quickly scroll down to transaction highlights, we see that this deal is expected to yield $2 billion in cost savings and will be accretive to Waystar's earnings, which means it will make the PE of Waystar go down. And we see here that the boards of both companies have approved the deal. And this here is standard in that the deal must be approved by the government for antitrust reasons. Then if we scroll down, we see that the company will hold an investor call to discuss the deal, which often happens. Quick side note on Kendall. This series, Succession, reunites director Adam McKay with Jeremy Strong, who played Kendall, who was one of his stars in The Big Short back in 2015. And see the description of this video to watch my reaction videos to The Big Short and many other finance movies and Billions TV show episodes. Now, to make the Waystar for Volter deal integration potentially even more complicated, Kendall's brother Roman enters the deal room.
Well, that hasn't.
Hey, mother. Look at all this. Yes, very serious.
Oh, this dude steals the show, eh? Now, it's not a surprise that the executive producer of Succession is Will Ferrell. Now, the father Logan Roy in this episode fires his existing COO and gives a job to his inexperienced son Roman. And nepotism is the advantage of birth over competence, and it happens all the time, which is so frustrating, eh? And some people think that Roman in the show is a bit similar to Lachlan Murdoch, who is Rupert Murdoch's son and the executive chairman and CEO of the Fox Corporation. And the show's creator, Jesse Armstrong, initially conceived the series as a feature film about the Murdoch family. And Kendall Roy in the show is similar to Rupert Murdoch's son, James Murdoch, who was Murdoch's former CEO of 21st Century Fox from 2015 and 2019. Now, what about Siobhan? Siobhan Roy, who we see in this next scene with her obsequious boyfriend, Tom, who cracks me up, who also works at Waystar and wants to buy Logan, the father, a gift.
My dad doesn't really like things.
Is like things.
No, not really.
It needs to say that I respect you, but I'm not awed by you, and that I like you, but I need you to like me before I can love you.
And Siobhan also wants to be the CEO, and she's really similar to Rupert Murdoch's daughter, Elizabeth, or the late Viacom CEO named Sumner Redstone's daughter, Sherry Redstone. Now, Sumner Redstone was a tough man, just like Logan Roy, and Sherry Redstone fought her father, and then effectively took command of the empire, merging CBS and Viacom in 2019 and installing herself as chair. What about the family trust, though?
On the family trust, which will decide the situation in the event of my unlikely demise, I'm going to add Marcy to myself and you four.
Whoa, okay.
So Marcy is Logan's wife. And so now the trust includes these people we see right here. Now, let me explain what a trust is and if you should make one for your family. Now, the trust is a central financial structure controlling Waystar Royco, and it perfectly illustrates how powerful and messy trust can be. And Logan Roy created a family voting trust to hold Roy's family's controlling shares in Waystar Royco. And each family member, meaning Logan, his kids, his wife, his ex-wife, and brother, has a vote. So no one person could dominate after Logan's death. So when Logan dies, the kids get 4 seats, and then Logan's wife, ex-wife, and brother get 3 seats. So the kids have potential voting control. Then Logan mentions this when it comes to Marcy, his wife.
And my seat also to go to her on my death.
What? Wait, well, that gives her double voting weight.
Uh-huh. So I've got some paperwork.
What?
So Logan tries to change the trust to give his wife Marcy an extra vote after he dies. And some of the children refuse to sign because doing so would dilute their future power and change the succession plan, hence the name of the show. And the kids all have to approve it because the trust is likely irrevocable, meaning everybody already part of the trust likely must agree to the changes, although some states in the United States here allow for modification through court approval or decanting. And so in some states, unanimity is not always required. Now, Rupert Murdoch established an irrevocable family trust around 1999 after his divorce. And he did this to ensure his children would inherit and share in voting control. But in recent years, Rupert Murdoch attempted to amend that trust to shift control more towards his eldest son, Lachlan, and reduce the voting power of his other children. However, a Nevada probate commissioner recently denied that attempt, ruling that he and Lachlan acted in bad faith in trying to change the irrevocable trust. Now, the trust as it stands gives Murdoch's 4 older children equal voting rights over his media business. So Murdoch's case parallels Succession in that a patriarch is trying to rewrite the rules of the existing trust to favor one child. But in the Murdoch case, the courts are really pushing back on that. Now, what is a trust, and should you get one, and how? Well, a trust is about asset protection, privacy, and inheritance control. And for billionaires like the Roys, it's also about corporate control and succession power. And the episode shows both sides. A trust can protect assets, but can also trap a family in conflict if the founder keeps changing the rules. Now, here is why you should have a trust, especially if you have children. A trust lets you control how your assets are managed and distributed, both while you're alive and after you die. It's not just for the ultra-wealthy. All families can benefit. And without a trust, your estate goes through what's called a probate, which is a slow court-supervised process that happens after someone dies to do the following. Number 1, validate the will, if there is one. Number 2, pay debts and taxes. And number 3, distribute remaining assets to heirs and beneficiaries. And the probate process can take a year. It's brutal. It's also a public process and can be expensive due to court and attorney fees. Now, if you die without a will, your estate still goes through probate, but state law decides who inherits. And you can avoid probate by putting assets into a revocable living trust. And so when you die, the trust, not you personally, your trust owns the assets, so they can be transferred privately without court approval. And a revocable trust is a living trust, meaning a trust you can change, update, and cancel anytime when you're alive. And with a revocable living trust, which you should get, your heirs get assets directly, privately, and faster. And with a revocable trust, you keep control of the assets, you can add or remove beneficiaries, and you can change the trustee or rules. By contrast, with an irrevocable trust, this is a trust that can't as easily be changed or revoked after it's been created. But unlike a revocable trust, an irrevocable trust's assets are protected from creditors and excluded from your taxable estate. It's key. And this can actually reduce estate taxes or protect assets for heirs or charities. And a revocable trust is usually titled as follows: the Christine and Chris Haroon Revocable Living Trust, dated October 15, 2025, or whenever you set up the trust. Let's talk about why an irrevocable trust makes sense for the Roys. There's 3 reasons. Number 1, it holds voting shares of Waystar Royco, the family's control mechanism over the public company. Number 2, it ensures that even if Logan dies, ownership and voting rights stay in the family, protected from taxes and outsiders. And number 3, it also prevents Logan or anybody from casually rewriting the succession plan, though he tries to do so anyway. Now, to change the irrevocable trust with the case of Logan, everybody must sign and agree. So should you use an irrevocable trust or a revocable one? Well, it depends on your net worth and what assets you want somewhat tax protected when you pass them on to your kids. So consider getting or switching to an irrevocable trust if number 1, your estate exceeds the federal estate tax exemption, which is $13.6 million per person in 2024. And this is scheduled actually to drop to $6 or $7 million after 2025. Number 2, you want to shield assets from future creditors, lawsuits, or nursing home costs. And number 3, you don't mind losing control, because once assets go in, you cannot easily pull them out freely. But you should not switch from revocable to irrevocable if you still want to access or sell your assets during your lifetime, or if your estate is below the federal and state tax thresholds, then the tax savings aren't really worth the loss of flexibility. Now, many people do a hybrid strategy, meaning they keep a revocable living trust for day-to-day control and probate avoidance, and they create an irrevocable trust, like a life insurance trust or a charitable trust, just for the tax or asset protection parts. Here are the next steps. If you want to create a revocable or an irrevocable trust or convert from one to the other, please speak with an estate planning attorney and or a tax advisor. And converting to irrevocable can trigger gift tax consequences or even affect your Medicaid eligibility if not structured carefully. So, is a will a trust? No, it's not. A will and a trust are two different estate planning tools, although they can work together. So a will is a legal document that says who gets your assets after you pass away, and it only takes effect after death. And without a trust, the will must go through probate, meaning a court process. And it can name guardians for children and specify funeral wishes as well. For example, I leave my home to my daughter Sarah and my savings account to my son Jack. And a trust is a legal entity that holds and manages assets during your lifetime and after death. And it can take effect immediately while you're alive. For example, my home and investments go into the Chris Haroon Revocable Living Trust to be distributed equally to my children. Now this next part is key. Assets in a trust skip probate. The trust can control when and how heirs get money, for example, only at certain ages. And remember, a probate means it can take a year before your kids get anything. And a probate costs money, meaning court fees, attorney fees, and executor fees, which can reduce what your heirs receive. Plus, there's public records. Anybody sees what you owned and who got what. One more thing about trusts and the board. What about Logan's brother's grandson, Greg?
Oh, can I help you, sir?
I'm actually here to see you.
Stand back!
I didn't know you were coming.
Yeah, you did.
So why did Logan decide to hire his brother's grandson, Greg? Because Logan's brother has a board seat.
If he was willing to give his seat to someone a bit more perspicacious, someone who could learn the ropes, running a theme park, say. I mean, could that be, you scratch my back? I'm not gonna say I could.
Now that we discuss board seats and trusts, Logan decides not to let Kendall run the company as he decides to not retire.
I'm gonna give it a couple of years.
As in?
I'll stay in situ as chairman, CEO, head of the firm.
Dad, you what?
And this is really similar to what happened with Rupert Murdoch, as Murdoch long resisted stepping down, and many insiders assumed that Murdoch would never retire. Then what happened was, in September of 2023, he formally announced that he would step down as chairman of Fox Corp and News Corp, shifting into chairman emeritus role, handing the chair role to his son Lachlan. Even then, Murdoch's announcement was somewhat ambiguous. He said he would still watch, read, and reach out with thoughts, implying that he might maintain influence rather than fully retiring. Now, why did Logan decide not to retire?
Me.
I'm just concerned you might be soft. I hear you let the guy from the website trash talk you.
When will you be ready to step down?
5, 10.
10?
It's my company.
And as much as I hate saying this, you have to be ruthless in business if you want to build an empire, and it's not for everyone. Yes, there are many nice people in the upper echelons of commerce, but many are extremely aggressive.
Do you want to hit me? Huh? Go on. Go on.
Dad, come on. What are you doing?
Are you gonna cry?
Now, Rupert Murdoch wasn't like Logan, but he used aggressive editorial control, family trust, voting power moves, and strong actions to maintain control over his media empire. And he had a lot of influence over elections, just like Logan does, which we'll see later on in the series. But Murdoch was arguably as aggressive as Rockefeller or Jobs or Elon Musk. Now, I'm not saying that they're all unethical, but you have to be aggressive to change the world. And Logan sees his son Kendall as not aggressive, and the successor that he will potentially choose is a child that is not soft, which we see with Siobhan and Roman, who are more shark-like.
What is in it for me?
I'd love to get you back in.
To come back, I'd want the top job.
Now, what made me sick in this episode was how Logan gained respect for his son Roman for doing this to a boy whose parents are watching and are poor.
Can you hit a ball?
Yeah.
Great, because I will give you $1 million if you hit a home run. Oh, I'm sorry. I can't give it to you. That would have counted, by the way. That was almost a home run if you went all the way around. But it was a really good effort.
Now, let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did a great job of showing the tension in a wealthy family when it comes to the trust and controls, and mirrors elements of what happened in real life with Sumner Redstone and Rupert Murdoch's families. And although the episode did a great job of showing how M&A works, Kendall being emotional about the deal and his sophomoric demeanor is not something you would see often in business. Plus, the M&A deal seemed to close pretty quickly, and in real life it can take months for a deal to close and then even longer to get regulatory approval. As a result, I'm going to give this episode a hold rating. Please like, comment, and subscribe, and I'll see you in my next reaction video when I react to Season 1, Episode 2 of Succession. Thank you.